Hi, everybody. This is Alan Ellman, the Blue Collar Investor, and I've created this video to tell you about a seminar presentation that I'll be doing for the TradeThirsty webinar event on Tuesday, March 23rd at 12 p.m. Eastern Time. The title of this presentation is using both covered call writing and put selling to generate monthly cash flow and to buy stocks at a discount. In our BCI community, we refer to this multi-tiered option selling strategy as the PCP, or put call put strategy. Outside the BCI community, many refer to this as the wheel strategy. Now, for option selling, we're going to go over the required skills for option selling. There are three: stock or exchange traded fund selection, and we use fundamental analysis, technical analysis, and common sense principles like minimum trading volume and avoiding earnings reports. We're also going to review option selection. What are the best strike prices to select and expiration dates? Finally, we're going to touch upon position management or exit strategies. Those are the three required skills for successful option trading. We're going to give you preview examples for both covered call writing and for selling cash secured puts. Then we're going to show you how you can actually use put selling to buy a stock at a discount instead of limit orders. Now, many of you may love a stock and you say to your broker, I'll buy it if it drops to a certain price. You put the cash aside in the cash account, and if the stock price drops to that threshold, you buy the stock. If not, you don't own it, and the cash you set aside did absolutely nothing for us. This will show you how to sell a put with one of two outcomes. Either we'll buy the shares at the target price, or we actually get paid not to buy the shares. Those are the only two outcomes. Now, we have to be willing to accept these shares in 100 share increments, which is the equivalent of one option contract. We're going to review our strategy goals, which basically is to generate monthly cash flow. We understand there's the possibility of those shares being put to us when we sell the initial out-of-the-money cash secured puts. If the shares are in fact sold to us, we then can write covered calls to continue the cash generation process. And if those call options are exercised and shares are sold, we can then use the cash to secure another put. And so it goes from the top left, where we sell out of the money cash secured puts. If exercised, we buy the stock at a discount. Then we write a covered call. And if that's exercised, we then use the cash to secure another put. Either generate cash flow or buy a stock at a discount. We're going to also use real life examples like T-Mobile US. I'm going to show you the option chain. We're going to show you calculations for the put leg of the PCP trade, as well as the call leg of the PCP trade. We're going to show you what all these calculation statistics mean relating to our trades. I'm going to show you that if you use this multi-tiered option selling strategy, the huge amount of downside protection, which is perfect for retail investors that have low risk tolerance with capital preservation in mind. We're going to summarize at the very end of the webinar the strategy, all the components of the strategy, and how to integrate the components of the strategy. Once again, a graphic look at the PCP strategy, an incredibly useful strategy to have to generate cash flow, to buy a stock at a discount, and lower our risk with high probability of success. So there you have it, ladies and gentlemen. On Tuesday, March 23rd at 12 p.m. Eastern Time, I'll be making this presentation. I've written well over 50 webinars over the years. This is one of my favorites. So I really do hope you can make and attend this event. And I want to thank you all for taking the time to watch and listen to this video. As always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.